Hello, welcome back to Learn Oikonomia. In this video, we are going to see money market, its meaning, its objectives, its features, etc. Coming to the meaning of money market, we can see that money market is a market for short-term funds. It's very important to remember this. We have to understand that money market is only concerned about short-term funds. Here we are not dealing with long-term funds. Money market would act as a bridge bridge between the buyers of funds as well as sellers of funds. In this case, we can see that the businesses, firms, etc., these can tide over the mismatches of cash receipts, cash expenditure as a result of their interaction in the money market. Money market is an avenue for borrowing and lending, especially for the short term. It is not concerned about the long term. You have to understand this very clearly. On the one hand, we can see that money market would help in shifting large sums of money between banks. On the other hand, we can see that it provides a means by which the surplus of funds of cash, rich corporations and other institutions can be used, and other institutions here the companies, firms, etc., which deal with money, which needs money or which have surplus fund with them. So these are other rich corporations that we deal with, especially in terms of money market. Now, coming to having understood the meaning of money market, let's see the features of money market. Money market, it doesn't have any geographical constraint as in the case of stock exchange. The financial institutions dealing with the monetary assets may be spread over a wide geographical area. It relates to all dealings in money as well as monetary assets. As we have already told, it deals with short-term funds and it is not a single homogeneous market. There is something in the money market. We can see a link between the Reserve Bank of India and other commercial banks. Reserve Bank of India is acting as the head with respect to the money market. Here, transactions could be conducted without the help of any brokers, and in the money market, there are a variety of instruments which are traded. What are the objectives of money market? Money market would cater to the requirements of borrowers for short-term funds, and it would provide liquidity to lenders of these funds, because interest rate would come in between. When you lend money, that means that monthly you will be getting some funds in the name of interest rate, right, or interest. It acts as a mechanism to provide parking place for temporary employment of surplus fund. You can invest or you can save your funds in banks from where you will be able to get interest rate, and also you can withdraw that fund whenever you want. That means that it acts as a temporary storage for your money. It provides facility to overcome short-term deficits. That means that you can go to bank or you can take loans. This would enable the central bank to influence and regulate liquidity in the economy. We have seen several money market instruments while looking into certain aspects of money market. Have done several videos regarding that. If you have not watched those videos, I'll be providing the links of the same in the description box. So there are several methods. There are many instruments used by the money market, and through these instruments, money market or the central bank, which is apex body with regard to the money market, could influence and regulate liquidity in the economy. It would help the government to implement its monetary policy through open market operation. When we have to deal with monetary policy, it's very important to understand that monetary policy, it is not the policy of the government or the central government. It is a policy taken by the central bank of an economy. But when we refer to fiscal policy, it is a policy taken by the central government of an economy. You have to understand the difference between the two. Once again, I would say that money market, monetary policy, central bank, these concepts are linked, and fiscal policy, central government, these two are again linked. Coming to the structure of Indian money market. Indian money market is divided into two. We have organized money market and the unorganized money market. In the organized money market, we could have central bank, and under central bank we have different kinds of commercial banks. An unorganized money market is composed of money lenders, informal money lenders mainly, informal money lenders, informal borrowers, the borrowers who are taking money from this informal money lenders and all. So this is known as an unorganized sector or unorganized money market in not only with respect to India but also in general. We can see that this is unorganized money market or unorganized sector with respect to the money market. That's all. I hope you got a very clear picture regarding the money market, the meaning of money market, the role, functions, features, objectives, etc. of money market. So with that, we end today. Please like, share and subscribe to this channel for more videos, and I welcome you to my Telegram group and Telegram channel to discuss your doubts. There have been a lot of members who are benefiting a lot as a result of their involvement, participation, discussion in the Telegram group and Telegram channel. They have been discussing a lot. I'm really happy regarding that. So you can also be a part of my Telegram group and Telegram channel. I'll be providing the links of both these in the description box. That's all. Thank you for watching.